Hello and welcome to IBTimes TV. I'm Lianna Brinded, Deputy Business Editor for the International Business Times. Joining me now is Jeremy Roe. He's the founder and chairman of BullyBanks. So hi Jeremy.
Lianna.
Hi, well thanks for joining us. Well, kicking off with some good news. Redress results have started trickling out from the banks for some of your members. Maybe you can tell us a bit about it.
Well, it is very good news. Two of the banks have gone out to a very small number of customers who've been missold these products. They were customers who were on the pilot study, and they have confirmed that the product has been missold, and they're moving into a process of defining what redress is, and that's excellent news. The products that have been referred to at the moment are structured collar products basically, and what is coming out is that it's clear the product has been missold. The product will be cancelled immediately, and there will be a refund of all payments made under the product with interest, and that's excellent news. And there's a clear recognition that consequential loss now has to be looked at, and that again is excellent news.
Great. But with the good news, of course, there must be some caveats. Can you walk us through some of them?
Yes, I'm afraid there are quite a few caveats. There is a concern still about the length of time this is all taking. That's the first caveat. Then we're talking about highly complex project structured collar products, and we are concerned still about what redress will be available in connection with other products. And there is some suggestion in the rumour, if you like, the rumour mill, that some people are going to be into a situation in which redress is not cancellation of a swap, but substitution of a swap for, say, 10, 15, 20 years with a swap for a shorter period. And that's a major concern. We think that's wholly wrong. These products are not suitable for small businesses. They have been missold quite consciously, quite deliberately by the banks, and we think the appropriate redress is to cancel all of the swaps and, in the worst case, merely substitute a cap for a swap. The third major concern, if you like, is the fact that we still don't know what redress constitutes. This issue of consequential loss, it's quite a fundamental issue, and we have been waiting since June the 29th of last year for some clarity as to what redress means, and we're still not clear what redress means. And hopefully redress will be an appropriate solution to the problem that has occurred. But I do think when we're through all of this, the regulators have to look again at their structure and their powers, because what has happened in terms of the simple expiry of time is a scandal in its own right. It's truly unfair for small businesses who have missold a product, and we're now well over 10 months rather since a decision was taken that the products have been missold, and we still do not know what redress is.
Yeah, picking up on that, and consequential losses, that's another, I suppose, point that we really have to look towards. And some of your members that I heard are looking to file for consequential losses. So how many, have you had any examples yet of how the process is going? No,
it's too early in terms of the stage.
Yeah.
What has happened is that the banks have accepted, in only a small number of cases, they're the only ones that have come out so far, but they've accepted, if you like, the direct loss, and they've then deferred discussion of other losses to subsequent meetings. And the banks are sensible in doing that. There's a recognition of the loss, there's a clear acceptance of it. What we would say is, if there is a clear acceptance, immediately sort out this issue, annul the product immediately, pay all payments that have been made by the customer back immediately, pay all the interest that's grown in connection with those payments back immediately, and then give the small business time to breathe and time to deal with the issue of consequential loss. Hopefully the banks will address consequential loss on a constructive basis, approach it sensibly, but we still don't know.
Sure. And I suppose regardless of what type of product businesses have bought, regardless of what stage they're on the scheme, the one thing that affects absolutely everyone on the same level is the ongoing banking relationship. Can you explain some of your concerns as a business owner as well,
right,
what that is?
Well, one of the things is we've had an issue with the bank which has arisen out of the bank's misconduct, and this is all of the banks, and the conduct has really been inappropriate. We've had issues with them as businesses, but stepping outside of that issue and the way they responded to the problem, there's no question we need banks. We need the banks to support us, and we need the banks to come in now and deal with the issue of redress in connection with the missale, and then put in place ongoing financial arrangements which allow big businesses who've been very badly damaged to flourish again. And it's a process that needs the banks to exercise responsible judgment, to accept that they created the problem, and then to work with the businesses to solve the problem. And I believe that does require the banks to accept this is not a normal commercial situation. You don't go in and maximise the bank's return at this moment in time. You go in and very sensibly deal with the business which has been damaged and help it work through the next 2, 3, 4, 5 years. And hopefully at the end of all this, we won't have businesses going out of business. We'll have flourishing businesses continuing to make a big contribution to the economy and its recovery, and also employment of other people.
Sure. So, I mean, rounding off, it would be great to know some milestones that BullyBanks is doing for its members, because, of course, BullyBanks has been instrumental not only raising awareness of the problem, but actually pushing through new policy and getting people to take notice. So, what is BullyBanks and the directors working on with whether it's speaking to regulators or the MPs? What's next on the agenda?
It's quite a structured approach. The first thing is there is a section of our members who are going to benefit from the redress scheme which is in place. We're creating a process of education, communication, and watching the way in which this process unfolds, so that if there are issues that arise, we can quickly communicate them back to the FCA, and educating business people who are, as a group, relatively unsophisticated in this area about consequential loss, about the sort of claims that they should be making. And that's one thing we're doing. There's another group of our members who are sophisticated clients who, according to the definitions proposed by the FCA, are not entitled to benefit under the redress scheme. And we're saying to them, we now need to work as a group with all of these members, and we need to communicate and share evidence. Very simple examples. You can have one business that identifies clear evidence that, for example, the banks were fully aware that these products had been missold. If you have communications from the bank's legal advisors to the effect that there was a problem with these products, and that's some years prior to the discovery of the general public, if you like, of the scandal, that's something that needs to come forward. Now, if one member discovers it, we would be saying, share it. If you have communications between the banks where it's quite clear that a bank's relationship manager and the derivatives advisor were working to their own best interest for the benefit of increased commission rather than the client's interest, and we have clear documentary evidence of that, we have to share it. We have to realise that we're operating as a group of businesses, and some of these businesses may have swaps 10, 15, 20 million. We need to cooperate, we need to work together. That's another group activity. We have issues in connection with embedded swaps, and we think there's an issue there where, although technically outside the jurisdiction of the FCA, there are people who have been put in a position very similar to ours, and we wish that to be addressed. There are also members of BullyBanks whose companies have been put into administration liquidation, and they are a particularly complex problem, and again we're working with that group and trying to arrive at a solution and a way forward. And that means talking to regulators, it means talking to the insolvency practitioners as an institution, it means talking to the banks, it means finding a solution to the problem. And ultimately, that's what BullyBanks is trying to do. There is a problem, it has been caused by the banks, but we need to solve the problem. We require the cooperation of the banks, cooperation of the authorities, and the cooperation of our membership as well. But frankly, that's there. and we need a solution to this issue so we can all get it solved and then move forward and continue to manage our businesses, which is what we all want to do.
Sure, well, as always, good luck, and I appreciate your time joining us today.
Many thanks.
So that was Jeremy Roe, founder and chairman of BullyBanks.